everybody. Hope you're well. It's Monday, 4th of May 2020. Remember my last video, for those who watched it? Uh, have you gone back to your favorite channel, Q&A sections and videos and live streams of those channels and asked them what the exit strategy is? By exit, I mean exiting out of all the cash and that's saved, or even if your question was what do I do with property, and then you listen to some of those channels that said sell the property and you did that, meaning that you've now got a substantial amount of money or cash in the bank. So what is the exit strategy? That was my last video there. Have you gone back? Have they told you at what point they will say, okay, now is a good time to exit this cash, to spend it somewhere, to buy things, buy stock, shares, obviously, um, buy property. But that time frame cannot be longer than say 12 months, or even, all right, let's be fair, like 18 months, year and a half, right? If it's longer than that, then you really don't have an exit strategy, because that if within a year and a half nothing's come up, asset class that is good for you, it could be land, could be, if you believe in all the doomsayers, you might be going buying some sort of a block of land somewhere and growing your own vegetables. Not that you need to buy that, you can probably do it existing in your existing house and backyard. People have done it. But what I'm saying is that if you don't know where to spend that money in the next year and a half, I mean, and not spend it permanently. I don't even mean buy shares and stay in them long. You don't need to stay in them long. Why would you? It doesn't have to be all in or all out. I was the one always thinking that as well, thinking, all right, so now is the time to buy shares, so you put all in to shares or property, which most people do. But no, it's not like that. It's not set and forget. Unfortunately, you have to maintain it, look at it, make decisions. It's not easy. So in this quest to figure out what next, I remember my kind of series of videos about 5, 6 months ago, where I've gone through the banks, not necessarily analysis, but just what my thoughts and what the news around the banks and what inevitable was going to happen with the banks is that you don't buy bank shares. And once again, when people say banks will go belly up, they won't. They will suffer loss in earnings, in margins, in profits. The share price will drop. Share, the investors will lose some of the money, not all of the money. Your cash in the bank, pretty much more or less, probably shouldn't be touched at this stage until we have an absolute Armageddon situation, if we ever do. So you don't have to worry about it too much. You just stay away from them. This is my videos that they had the profit warnings. They didn't need the CV to happen. This was the cycle. But wait, there's more. I told you so. No more cuts. They said no more cuts for interest rates there. I kind of just reported it, what the news was at the time. But this is now. Or is it? Sorry about the little glitch.
National Australia Bank's pandemic surprise, an early results announcement as it goes begging to the market for more money and slashes the dividend.
And the language is very important. This is what a CEO, I think, of NAB said about that. I mean, it's just let's read into the words.
We believe we can continue to pay a dividend at a reduced level, but that depends upon what's happening with the financials of the organisation.
So we can continue to pay a dividend. So, if a dividend was 80 odd cents, now if it's 2 cents, just hypothetically, I think they reduced it down to 30 cents for in NAB example. If it's a 2 cents, well, we are paying a dividend at a reduced rate. And that obviously depends on the financials of our organization. Of course it is. That's all that dividend is the proceeds of the profit that you're sharing with your shareholders. Very simple, not a lie, but you can't go back and say, well, you told us that. Well, we said we can continue to pay dividend, some dividend. It won't be as much as before, and that'll all depend on how we're doing in the market there. And I don't think they are going to be doing well.
National Australia Bank surprised the market today, announcing results 11 days early and launching a massive capital raising. It also confirmed what shareholders feared, a torched dividend and red flags everywhere that things will get worse before they get better. The dividend was slashed from 83 cents to just 30 cents. The half-year profit halved to $1.3 billion. The big reason for that huge fall is the amount of money that the bank has put aside for loans going bad as the economy contracts COVID. It lifted from $470 million to $1.2 billion. The bank's capital raising has secured $3 billion from...
So, I mean, remember another thing that we said, that the catalyst of property market dropping is going to have to be and see unemployment, and that's what's going on right now. Again, in my opinion, the CV was accelerated it. It's certainly an excuse to say, well, we didn't see this coming, although they've seen it all coming. We know that 60% of Australian bank books are in mortgages, which is unprecedented. It's not. It is, of course, essential for living, but it's not a productive asset. It's not a factory. It's not a business. It's not a new business, a startup. It's not an innovation. It's just a house that somebody needs to live in, and the rest of the population, or the speculators, the investors, are, well, speculating on it, in my opinion. Okay, so how bad is it?
Ross McEwen, thank you for your time. Taking a look at the numbers, at least 1 in 10 of your home borrowers have already deferred repayments, and we're only really a month into this crisis. Surely that number will rise.
And back to the other very important reason why I don't even talk about property anymore. It's clear that unless you must, or you've found the bargain of the century, you really don't want to go there, especially if you're investing. If you're buying it for some reason you can't rent, I don't know why you couldn't for another 6 to 12 months to start the family or continue the family or grow the family. Sure, but I think there'll be times when the property is going to be cheaper. So the other reason is the unemployment, the center link there.
And it took the corona crisis to double the dole, while economists say paying the unemployed more is good for the economy. Getting a pay rise for the unemployed has proved politically impossible until now. The coronavirus pandemic has seen the dole effectively doubled, with Newstart rebranded as JobSeeker and 1 million people claiming it for the first time. The new beefed up payments kick in today as the government moves up to shore up spending, amid warnings slashing the payments post-pandemic could be a big blow to the economy. Daniel Ziffer reports.
Like, honestly, it's hard to tell. I think the most viewers, most people will be inclined to, down the doubling of the payments of the dole recipients. I'm employed. I pay a lot of taxes, and I don't have anything against these people. And I would really not want to be one of the recipients, especially the old allowance, which was really small, and now they've doubled it. Okay, what else doubles? It's a bit, is it justified? I really don't know. I haven't looked into it, but it's ridiculous. What will happen is that those people, again, not judging, but those people who receive these payments are less likely to invest it or to hoard it, to save it. They will just spend it into the economy. And so, Keynesian model, give people money, let the consumption rise, may work, may help it, but what happens after 6 months when that gets reduced and everything else goes back to normal? Another thing I don't understand is, like, somebody brought this up, like my neighbor. I mean, again, I don't watch news. This might be a very easy answer, but so what happens with those people that don't have to pay, or they can pause paying rent, for example, for, I don't know, 3, 6 months, whatever? What happens when that resumes? Do you just resume paying rent where you left off, or do you have to pay back everything else that you didn't pay, or maybe at a reduced rate? And again, if you're going to stop people's incomes, how do you stop their expenses, and shouldn't you stop the expenses? So somebody's not paying somebody's rent to a landlord, but landlord's got a mortgage with the bank, how does the landlord go back to bank and say, we're going to have to pause, or we're going to have to postpone this payment? I really don't know. If it could be a short Google search away, but you've just hit pause on the economy. What happens when you push resume? Yet most and a lot of people might not even go back to their jobs, because the way of consumer spending their money is probably altered for good, where a lot of the shops will probably remain closed, and the shops that went out of business and stopped paying their rents, they've broken their leasing contracts, and that they're just not going to go back. They're looking to something else, somewhere else. Maybe that's when the economy reinvents and reinvigorates itself. But I hate to say, but time will tell. But we need to stay focused. Cash is still king. But again, go back to your favorite channels, and ask at what point at the prices of the stocks or property will you, sir, recommend, or at least do it yourself, get into those markets or release those funds in the cash that you have sitting in the bank. So the exit strategy out of the cashed up position, if you're lucky to be in one. So go and ask. Let me know what they say, because education is fine, but we need recommendation solutions. All right, that's it for now. Talk to you soon. Bye.